Welcome back for another top-notch video. This week, guys, we'll be talking about the week of the 27th of July through 31 July. We always talk about the TSP Roth IRA brokerage accounts on this top-notch channel. If you're interested, please like, subscribe, or share. We'd love to have you guys along for the ride. As always, if you are in the TSP, we talk about the C, S, I, and F funds. If you're in Roth brokerage IRA accounts, we talk about the ETFs, IVV, VXF, EFA, and AGG. What these translate to is basically the S&P 500, small caps, international markets, and bonds. We kind of generally do a general overview, and then we kind of go into a technical analysis with our charts, and then as always, we kind of show you where we are allocated on the Top Notch channel. One thing to mention for the Top Notch channel, we are at 2.8% for the year, beating all equity funds in the TSP account. So the top equity fund for the TSP is the C fund right now, sitting at 2.3. We are at 2.8, beating all those equity funds. Of course, AGG bonds is the outperforming for the year out of all funds. We plan to catch that in the future. Let's take a look at all of those, do our broad general market overview at first, and then we'll move on. So as you can see for the week, guys, we had an up week for the C, S, and F funds, whereas the I fund was down almost 2%. And then for the year, as you can see, the C fund or our equity funds are down, except for the C fund, up 2.3%, while our bond fund is doing very well at 7.6% for the year. As always, we are very close to that for every fund. We are beating all the equity funds, just behind bonds by about 6% or 4% there moving forward. How did the charts look on a chart perspective? As you can see for the C, S, I, and I fund for the week, guys, kind of had a bumpy week going out and about. The equity funds were up there on the 27th, and they moved back down to almost break even. And then they really took off on the 29th of July. And then the C and S were about even, why the I fund really broke down. I'll show you that later in the technical analysis charts. Tom from TSP Talk does some commentary here. Please go to TSP Talk website if you're interested in seeing that. He does some great commentary for free. We just like to look at that commentary and see his charts. As you can see here, he has the 20-day moving average in here. Basically pointed out that we've seen a lot of support here with the 200-day, the 50-day, and now the 20-day moving average for our charts. And we also did recently just have a breakout from early June. Charts popped their heads. These are Thursday's charts. Charts did pop their heads above there for the S&P 500 or the C fund. So what once acted as resistance on some of these line charts could now act as support, as we are now above this red line moving forward for the C fund. How does the S fund look? Kind of similar, guys. Had the same issue here. We got our 50-day and 200-day moving averages heading in the right direction on this chart, and then we did pop our head above that that line of resistance that we saw early June, hoping to see it move forward from here. Likely we'll probably see a move in the Top Notch channel early this week, so please pay attention to our Facebook and Twitter accounts as we post there. EFA did have a breakdown for this week, so tried to pop its head above, below, head above, and below this resistance line here. We ended up doing a breakdown here. Now we're going to have to wait and see if it ends up hitting or bouncing off that, basically the simple moving average or the 200-day moving average, one of these two lines in here. But we'll have to wait and see where things go for EFA. And bonds is continuing to chug along just as it always has. Very good trend line here, continues to rise slowly but surely. Good place to have money right now if you don't want to be so risky and not have money in the equity funds. Get that money out of the G fund, maybe stick it in the F fund if you're a TSP user, or if you are don't want to be in stocks, stick that in AGG moving forward. Some other little broad technical analysis, some bullish signs I want to give you guys moving forward. The S&P 500 or the C fund, basically this is price. So this is price here, and then these are the moving averages. We have everything from the 50-day moving average all the way out to the 200-day moving average on our charts here. As you can see, the real bullish sign, what you want to see is all the moving averages here, slowest on the bottom, fastest on the top. Then price really jutted down here in March, had some consolidation moving forward throughout here. Moving averages were really mixed, and now we're starting to see those moving averages come back to what they used to be back here in January and February timeframe. Price is above all the moving averages. It's a very bullish sign. Did see we saw it basically bounce off this moving average twice back in June, way above here, which is really good. So see some white space in here. Really positive bullish sign moving forward. Another chart that we like to see here that people ask me about is volatility. These are from CiovaccoCapital channel, by the way. If you're interested, please check out their YouTube channel. Where did we see volatility spike? Well, we saw this huge spike here in March. Very, very rare to see it spike that high on the volatility index. As you can see, all the way from 2008, we only saw it spike that big once back in the financial crisis. Then we saw it start to get lower and lower here. And then right in this area here is right where the longest bull market in history took off. And as you can see here, had a spike. We are now in that area now, that same time frame. What can we see moving forward? Possibly could see some bullish action going forward, or a new bull market kicking off here in the future for stocks. Just doesn't say it's going to happen, but just looking at past history, that's a good indicator of where we're at on the volatility or the VIX. Moving forward, S&P 500 weekly, 200-day moving average. Typically what you see with a bear market, we have the Great Depression here. We also see the dot-com bust here, and then we see the financial crisis here. With a bear market, we see price move below the 200-day moving week, or the 200-week moving average, and then the 200-week moving average eventually rolling over in all three of these cases. Don't have that with the 2019-20 case here. As you see, we slowly drop below that, and we pick right back up. Moving forward, we are above that line, and we're 17 weeks above that line. With some of these bear markets, sometimes they can give you a fake out. They can move right back above the line here. It did in this case, financial crisis, for about 13 weeks before we really had a crash. This case, 2003.com burst about 8 weeks before we really had that crash. There it is above the line there. And then Great Recession, we really saw that. Great Depression, I should say. Really saw it only bop ahead for about 3 weeks before it dropped below. Moving average started to lean over. We're not seeing that over here for 2019-20. Looking good, moving forward, bullish signs going forward. Another really positive sign we're seeing is the Nasdaq, even though we don't track that for TSP in our Roth IRA brokerage accounts. It did make an all-time high here in July and June, which is a very positive thing for stocks moving forward. Possibly the other indexes could follow. So just keep that in mind. S&P 500, small caps, international markets could follow what the Nasdaq has already done, which has broken an all-time high from back here in February. Moving forward, just to kind of give you guys an idea of bull versus bearish markets. As you can see, we have the dot-com bust here, and we have the financial crisis here. Typically with a bearish market, we see that price, which is this green line here, cross the moving average, and then we see it decline for quite some time, for 2-3 years before we see a really big bear market. Same here with 2007, 2008, cross that price line, try to get back above it, and then drop there. That's all that red in there. A lot of loss, a lot of very hardship there. Don't really see that in the present day. We drop below that line, then move right back above that. If you see on our next chart here, typically when we move back above that line, so after that bear market here, good things tend to happen. When we have a short stay below the line, good things tend to happen. Short stay below the line, good things happen. Short stay below the line, good things happen. Short stay below the line, yet to be determined. But based off of market history all the way back here in 1995, when we slowly drop below that line, we tend to have good things happen for a period of time. Let's move into our technical analysis now for our funds. So we have the C fund up first, IVV. What do we see in our charts? As you can see here, we have our slowest moving average on the bottom, the 200-day. Then we have the 50-day, and then the fastest moving average on top. That is a very bullish, good sign here. We need some new trend lines drawn in here, but we are above most of our moving averages. That is very positive for IVV. How do we look on a technical analysis? Long-term charts, we like to look at the weekly charts. Two indicators we like to look at to make it easy and simple on you guys. We have price on this up chart up here, and then down here we have our indicators. The two things we like to look at is the derivative oscillator, which is these green bars back here, and red bars. Typically when the green bars are moving upward or they're moving from down to up, we see price react positively, and then when they're moving down, we see them price react negatively. So we have that, and then we also have our price percentage oscillator. That's that blue line, and our moving average, which is the red line. When the blue line is above the red line, price acts positively. When the blue line goes below the red line, price reacts negatively. So those are our two things we like to look at for our charts moving forward. As you can see right here, one of the biggest things we had for this week for long-term charts is we had our price percentage oscillator above our moving average. Price was reacting positively for ever since May. But what we didn't like to see is our derivative oscillator was starting to drop off here for quite some time. One thing we saw positive here is the derivative oscillator went from a 3.1 from last week, from this week, to a 3.8. So that is a positive sign. We want to see about one more positive sign in there for confirmation before we know that this is a very good chart to get involved in, a good place to have money moving forward for the long-term basis. On a short-term basis for IVV, basically what we have is our price percentage oscillator did drop off at the end of July. That kind of scared us a little bit with long-term charts in a downward momentum. So we ended up getting out. Once we got out around this area, price really didn't take off or do anything different for a while. Stayed in the same area. Now that price percentage oscillator is starting to come back, and you can bet if it crosses, we're going to get right back involved in this chart to make sure that we don't lose that much of where we're going moving forward for this chart. And then our derivative oscillator is also in the positive. So one positive sign here, waiting for our second confirmation before we get involved with the C fund or IVV S&P 500 moving forward. Where we look for VXF or the small caps. Small caps look very similar to IVV. Moving averages are all in the right direction. That is looking good for small caps. Need some new trend lines drawn in here. Let's go to the technical analysis, long-term, short-term charts. As you can see on the weekly chart for VXF, we don't have that confirmation yet with our derivative oscillator still moving the downward area, but price is moving positive, so that's kind of weird for us. Usually we see that react, and it hasn't really been doing that. And then, of course, on a short-term basis, and the price percentage oscillator is above, so we have one of two signals here. And then on a short-term basis, as you can see, charts are down right now, just waiting for that to pop back up on the derivative oscillator and PPO line before we get back involved with VXF or the S fund. Moving on to EFA or international markets. What do we see here? Had some bad news with international markets this week. Really tried to pop above this line here. Tried to see some breakout here. Couldn't tend to get above this line here. And then we saw it break below that 200-day moving average. That is a very negative, unbullish sign. Our 50-day moving average is still below our 200-day moving average. Weak charts here, not a good place to be moving forward. Let's look at it from a price percentage technical analysis. On long-term charts, EFA, where we look, derivative oscillator still headed in a downward projection. That is not positive. Have a spinning top here for price, usually meaning indecisiveness. Want to be careful around that as we see that. And our PPO line is starting to kind of flatten off here, move closer to the moving average, which is not a positive sign for EFA. Overall, in general, I would just kind of avoid EFA right now. There's better options to be in as we move forward. Finally, we have bonds, HEG F fund. This fund has continued to rise slowly but surely for the last 2 months. Continues upward. It's upward climb, no issues, concerns. If you're kind of sketchy about stocks, this is a good place to have your cash. Let's look at it from a technical analysis. Technically wise, weekly long-term charts. As you can see, our derivative oscillator is moving in an upward direction. We're going from 1.4 to 1.9 to 2.4 this week, so that's very positive here. Positive price action here. Our PPO line is above our moving average line. We're starting to see a little white space in between there, which is a positive thing here. That's very good for AGG on a long-term basis or the F fund. Short-term wise, PPO line is struggling a little bit. Blue line is below that red line. If we get across here, that's a good indicator to get back into this market and for the next 2 weeks probably, or start to do an entry in the next 2 weeks. And our derivative oscillator, of course, is positive. So one of two signs here, and prices continuing to move upward. That is all of our charts for this week, guys. Really appreciate you guys being here. Please like, subscribe, or share this channel. If you guys have questions, please write them in the comments below. That's on the Top Notch video. We'll see you guys next time.